Uh, Nice to meet you after some time. So today what we are going to discuss about a very important lesson in Pearson edexcel IEL base level. That is a non-profit making organization. So this is a really important lesson because always we can find a question. It can be a 50 marker or it can be a 30 marker. So first of all, I'm going to share the screen. Okay. So So first of all, I need to give you an idea about non-profit making organization. Before that, I'll show you that then what we have to do. The first thing I'm going to introduce or give the introduction about non-profit making organization. Then I'll tell you how to prepare receipts and payment account. Then prepare trading account for a club or non-profit making organization. Next step is to prepare subscription account, then life membership, and then prepare income and expenditure account and prepare financial portion of club and society. So those are the areas we are going to cover here. So we move to the next slide. So this will express you some idea about non-profit making organization. Actually, the main name is of this non-profit making organization is to provide some facilities or service for their members for a subscription fee or membership fee. Some examples are youth clubs, sports clubs, drama clubs, and music clubs. What they do is their main intention is not to earn profit. So we have learned income statement, or we must have prepared sole trader statement of comprehensive income. So in there, what we didn't to earn profit. So they are profit making organization. But this is not a profit-making organization. So non-profit making organization clubs are, their main intention is to provide services for their members for a membership fee, which is known as subscription. So another important thing we need to remember here is when we prepare a statement of comprehensive income, we earn profits. But here we prepare instead of that income and expenditure account, and here instead of profit, we gain surplus. And instead of loss, we gain a deficit here. So the important thing is in here, they have to prepare receipts and payment account, which is similar to the summary of the cash flow. So we will move to the next slide and see how to do these sums. Okay. Now, first step is to prepare the receipts and payment account. But if you look at the previous past papers, normally they do not ask you to prepare receipts and payment account. But there are instances where very less number of questions that they ask you to prepare it. But recent papers, I have never observed more questions to prepare receipts and payment account. So sometimes they give you the receipts and payment account. So this is similar to the cash book. So all the money we gain will be recorded in your debit side, and money paid will be recorded in the credit side. But important thing to remember here, if they ask you to prepare receipts and payment account, so normally we do not consider, no adjustments are made for accruals and the prepayments. So accrued expenses or prepayment, any other prepayments, and the depreciation is not recorded here. Depreciation is a non-monetary item. So we are unable to record it in the cash book or receipts and payment account. And capital receipts and revenue receipts are recorded. Capital receipts mean normally when you sell your non-current asset, you gain money. And revenue receipts mean day-to-day income. So you gain, those things can be recorded. And same time, capital and revenue expenditure are recorded. Now, capital expenditure means the money you spend to buy non-current asset, and revenue expenditure is day-to-day expenses. So those items will be recorded. We move to the next slide. Okay, this is an example, a format of receipts and payment account. So you can see opening balance also debit because the cash balance normally it can be OD, but so all receipts will be in the debit side. But really important thing to remember here, you can see in club accounts or non-profit making organization accounts, always the subscription is there in receipts and payment account. All the membership fee we gain will be recorded. But important thing is this amount is not exactly the amount that we need to get in this year. It can be sometimes someone who didn't pay for the previous years, that money also will be there. Someone is who's paying for the next year also can be there. Therefore, to gain the correct subscription fee relevant to this year, we will do that step later. We prepare subscription account. So something to remember. And all the income will be debited here, or sorry, all the receipts will be debited here, and all the payments will be credited here, and you finally get your balance. So closing balance. Okay. So you can see expenses, printing, rent, electricity, telephone, all these expenses will be recorded. So there will be a small question. So the Mill Music Society holds a meeting and concert in the local school. It pays 1,200 per annum. This fee was paid in the first week of January 2018 by check. It has 50 members paying subscription of 200 per annum. In 2018, all members paid the annual subscription fees, with 5 members also paying for the following year. Ticket sales for concert were received to the value of £2,000, with the associate cost of 1,250 being paid out in cash, and other payments during the years given in this way: printing cost, music purchase, heating and lighting, and equipment. Fundraising activities rate 825 during the year. At the start of the year, the cash bank balance was 50 credit. So prepare receipts and payment account for the year ended 31st December 2018. So the sum is also there with the answer because it's easy for you to see this thingy. And you can see when you're writing, so you can write Mill Music Society receipts and payment account for the year ended 31st December 2018. This is your debit side, or you can receipt side, or your payment side is in this side. Now, first of all, we look at how we get the incomes. Okay, receipts this side, sorry. The Mill Music Society holds a meeting and concert in the local school. It pays 1,200 per annum. So they must be renting a building, hopefully. So therefore, it's an expense. So we can put that amount, rent 1,200. Then it has 50 members paying subscriptions of 200 per annum. So according to the information, 200 pounds will be paid by each member, and there are 50 members they are paying. So 15 to 200 is 10,000. But here the figure is 11,000. We'll see why is that. In 2018, all members paid their annual subscription fees, with 5 members also paying for the next year or the following year. So in addition to this 10,000, we get another 5 members subscription fee, which is relevant for the next year. So 5 into 200 again, 1,000 you get. 50 plus 15 to 200, 10,000, and this extra 5 into 200,000. So 10,000 plus 1,000 altogether, 11,000. Then ticket sales for concert were received to the value 2,000. So it's an income when you sell ticket to get money. So it's a receipt 2,000. With there are some expenses associated with this, so it's common expense. So that 1,250 we write concert cost. Then other expenses will include printing cost, so 800, and the music purchase 250, equipment 5,900. Fundraising activity raised 825 during the year. So it's fundraising and money is gained. It will get a receipt fundraisers 825. And the opening balance is a credit balance. So balance brought down is credit balance 50. So next step is for you to do is balance of this thingy. And then you can see when you balance off, the higher side will be this side. And you get the total figure to this side. And when you balance off, you get a balance carried down figure will be 3,525. So this is the way you need to do your receipts and payment account. So This figure, the closing balance figure, is important for us if they are asked to prepare financial position. So that will be our important balance. Then we are moving to the next step of receipts and payment, the club accounts or non-profit making organization, that is preparing trading account for the club. Now you may ask me a question. Now at the beginning I said these club accounts or non-profit making organization, they don't worry about profit. So why is this trading account? Sometimes inside the club there can be businesses, something like cafeteria, cafe or cafeteria. Sometimes some shops can be there. So these organizations, they have to earn profits. So therefore, that's an income again, receipts again, or income mainly then for the club. So they have to earn profits. So therefore, we have to prepare trading account and calculate the profit from that cafeteria or shop. We go to the next slide. Now, this is a small question given. Avani Sport Club operates a cafe, and the following information is available for the end of 31st December 2018. You can say cafe revenue and inventory. You know how to prepare trading account normally. The format is revenue minus cost of sales. You get the GP. But the important thing here, even though it's a trading account, the final answer we get here is a profit from a cafe or profit from the canteen or etc. Remember, even after getting your gross profit, if there are some expenses related to this, you need to include, and that should be deducted, and you get a profit from that particular canteen or cafeteria or shop, anything. So we'll start with revenue from cafe, that is 2,900. And then you calculate the cost of sales. So opening inventory is given 450, purchase is given 1,250, closing inventory 250. And you get a figure here, which is known as cost of sales. After that, you deduct from the revenue, you get the answer 1,475. That's the GP. Everything is over up to from here, but any other expense related to this particular cafe is not there. But there are. Further, when you are reading, wages for the staff for the year were 3,600, of which 20% related to staff in the cafe. So out of these wages, 20% of the wages is coming. It's coming under the cafe. So therefore, 3,600 20% mean 720. So that also should be deducted from this GP figure. So you get the final answer's profit for the year. And another important thing to remember, after calculating this, we are shifting this to your income and expenditure account because this is one of the income that club gain. That's really important to remember. Okay, that's a homework question for you. Same method you can apply and calculate the trading account and find the profit from the, in this case, it's a snack bar, profit from the snack bar. The answer is given, but you can further calculate. So next, what we are going to move is subscription account. I have told you subscription is membership fee that the members will pay to us, and club survival is mainly based on that. And here it's important to remember something about very important two terms: subscription in arrears or subscription owing or subscription paid in advance. Remember subscription in arrears. Now, when you are doing income statement, if arrears is there, we always consider it's accrued outstanding figure. That is because the company has to pay that. But in this case, our club has to get this money from our members. Subscription in arrears. That means members, they have to pay their subscription fee, and we, as a club, imagine, club has to get that money. So till we get that, we have to consider it as asset. So remember, subscription in arrears is an asset here. Subscription paid in advance mean the members, they have paid the subscription for not only this year, they have paid for the next year. So we did not provide any service, and we have to provide that service in the future. Since we haven't provided that thingy, it is our liability. as the club. So subscription paid in advance is known as a liability. Okay, when you look at the format here, remember the subscription owing or subscription arrears, I told you it's an asset. So opening balance here, balance brought down, it should be in the debit side here. And closing balance of subscription arrears, since opening balance here, it should be in this side. Then when you look at the subscription paid in advance, liability, open liability always in the credit side here. And the closing balance of subscription paid in advance, since its opening balance is here, closing balance is here. Okay, so important 3 items were recorded. Subscription arrears opening and closing recorded, and subscription paid in advance opening and closing is recorded. Another 2 very important items we have to gain here. I think you can remember when I was explaining a receipt and payment account. I told you receipt and payment account. There will be an item called subscription, some amount, imagine it's 1,000, imagine. So this means not exactly relevant to this. This includes many things I told you at the beginning. So this is debit, and the double entry the other side should go here. This amount. So always you will have to look at where is your receipt and payment account and what is the subscription amount, it's debit and this is the credit. But in some questions, they don't give it as a receipt and payment account. They give it as a statement, So you need to read and get that figure. So it comes here. And the other important thing is subscription written off or irrecoverable debt. Subscription irrecoverable debt or irrecoverable debt. Okay, so normal irrecoverable debt account debit, subscription account should be credit. So those are the items that those are the items mainly we need to consider when you are recording this. Okay. So after writing the subscription in arrears or subscription irrecoverable debt figure, then what we need to do is we have to see the highest side. Normally, its highest side will be in the credit side. You take the total in this side and then deduct these 2 brought down and the carried down figures, and then you get a balance here. That amount should be transferred to income and expenditure account. You know it's an income because subscription income, so therefore you write transfer to income and expenditure account. So we are going to find this figure. How do you find total? Bring the total here, deduct these 2, then we can find this figure. Okay, and this one taken from the receipts and payment account. So those are the important thing to remember. Okay, we are moving further. The question is given here. Case study, all school cricketers. The following information is available to treasurer of all school cricketers for the end of 31st December 2018. You can see 1st of January and 31st December. So 1st of January figures are the opening balances and 31st December closing balances. Further, they say amount received and banked for subscription during the year total 24,700. Now you can see that is the subscription, that is the subscription figure normally should be recorded in receipts and payment account, but it is not given subscription receipts and payment account. Instead of that, they have given it in a statement. It was agreed that 1,000 of subscription owing at start of the year now irrecoverable. So irrecoverable debt I told you, and that's coming there. So you are asked to prepare subscription account. So when you go to the answer here, you can see we prepare the subscription account. So first of all, we get the subscription owing or arrears, so it's an asset. So here 3,000 subscription owing opening balance 3,000 here. Subscription owing closing balance, since opening here, it should come here. Then we go to subscription page in advance. Opening balance is a liability, so opening balance liability should be in this side. Closing balance 1,007, opening balance here, therefore closing balance here 1,750. That is done. So then we have to concern about the statement. Now he say this is the figure, subscription figure in receipts and payment. So it's in the receipts and payment account debit, and here it should be credit like bank. So you get here. Another important thing is irrecoverable debt. Irrecoverable debt double entries, recoverable debt account debit, subscription account credit. So we put credit side. Everything was recorded. Now what we need to do is take the total of these sides. So you get 30,050 and bring the same thing with 30,050 and deduct this 1,750 and 3,000 from this amount. So you get the answer 24,300. Then you can transfer that amount to income and expenditure account as subscription relevant to the year. So what we do from subscription account, it will be adjusted and you get the exact subscription figure relevant to that particular year. That's what we are going to do here. So which is really, really important when you're preparing your income and expenditure account. Hope it's understood, and we are moving to the next slide. This is really, really important because without having any idea about this, you are unable to do anything. Now, for life membership is something, some members are there, they want to get the life membership for the whole lifetime period. So company must be getting, club is getting a lump sum payment from the member, and they are promising to provide the service or the facility during his lifetime. So that's really important. So if the club is promising to provide the service during his lifetime, the important thing is what we need to remember. So life membership balance amount, what we get, it should be a liability. Since still we didn't provide the service during his lifetime, we are promising since the member has got the life membership. So therefore, always remember it is a liability. It is a non-current liability since it's a long period. Lifetime is a long period. Okay, with that idea, we'll be going to do this question and it will be very clear for you. During the year, Scotch Club received £300 in life membership fee. It began the year with a balance of 3,600 in the life membership account. It has a policy of transferring 12% of the account at the end of the year to income and expenditure account. Now, these policies will be vary from organization to organization. So when you when you get the question, please read carefully what is the policy and then act accordingly. That's what you need to do. The basic thing is now mainly when you are going to do your life membership account, remember the opening balance given here. You can see the opening balance here is this one. It began with the year 600. So it is a liability. That's why it's in the credit side. That's done. Then the important thing here is during the year, they have received 300 in life membership fees further. So when you get money, our bank account debit and the life membership account credit, that's a normal double entry. So that's done. Now, our total figure will be 900. Their policy is, it has a policy of transferring 12% of the account at the end of the year. So since we have 900, so you can see 900 into 12%. Into 12%, you get the answer 108 pounds. So this is the amount we need to write, 108, and this will be transferred to income and expenditure account. And remember, after that, what you need to do is you have to balance off. So when you balance off, balance with 792 carried down and 792 brought down balance. This is the way you need to prepare your life membership accounts. Most important thing is opening balance is a liability. That's really, really important. And how we are going to record this thing in our income and expenditure account is life subscription income. It's an income. This should be because we are transferring to income and expenditure, so it's an income. And the other thing is this balance, the closing balance 792. We're recording financial position as a non-current liability. We write there life membership 792. Okay. Next important thing to discuss two things to discuss before we move to preparing income expenditure account. Sometimes in clubs there can be situations like recording loss of inventory. So it may be stolen, or it may be missing, it may be destroyed, or we don't know exactly. So, but the thing is, it's important for us to calculate the missing value. That's what we are going to do as an accountant. So, but we have to consider one equation. If the value of the cost of sales given, it's relatively straightforward to calculate the missing inventory figure. Missing inventory will be based on this formula. So you must be knowing, normally, cost of sales is equal opening inventory plus purchase minus closing inventory. From that figure, the cost of sales figure given is different. So then it's known as a missing value is there. So what you need to do is opening inventory plus purchases minus closing inventory minus closing cost minus cost of sales. So actually opening and purchase closing inventory also cost of sales. But when you take that figure and the cost of sales figure, if there is a difference, then we can consider there as a loss of inventory. With that idea, we will move to a question, then you will understand further. Now, on 7 December 2018, new employee at the badminton club got rid of some of the inventory sold in the club's cafe by mistake, as employed believed it was out of date. The club need to find value of missing inventory for possible insurance claim. The following information is available. So if you now, if you go to this area of this question, so we can see opening inventory is 350. Yes, it's done, opening inventory. Then the purchases, yes, 550. That is done. And the closing inventory is given here, 85. So there's a figure. And then we have to check where is the cost of sales figure. How are we going to calculate the cost of sales figure, even if it is not given? Now with the information given, first of all, we should be able to get the revenue. They have given the revenue. Revenue figure is 1,250. And further they have given gross profit as a percentage of revenue is 40%. So from this, we will be able to get the gross profit. How do we get it? 1,250 into 40%. Oh, that is our gross profit. So we'll calculate the gross profit. I don't have a space here, but we'll see whether we can use some space. So we can say gross profit as a percentage of revenue. If you write gross profit, technical difficulties, gross profit over revenue into 100 is equal 40. That's the thing. So gross profit we do not know. We write GPA as it is. Revenue we know 1,250 into 100 is equal 40. So when you solve this thing, you get an answer. Gross profit is equal 40 into 1,250 divided by 100. So then you get the answer as your gross profit, 500, when you solve this. So your GP is 500. So they have calculated that GP is 500. You can see here. Now what you need to do is, what we are going to find is the cost of sales. So revenue minus cost of sales is equal GP. So now we know GP and we know revenue. So by using the formula, we will be able to calculate our cost of sales figure. That is 750. So if you take this figure, 350 plus 550 will be 900. 900 minus 85 will be 815. So here we get 815, and actual cost of sales according to this, we'll get 750. So you can see how much is missing. 815 minus 750, it's 65 is missing. So this is the way we need to calculate our missing loss of inventory. Hope it's clear. Okay. Next one is recording loss of cash. This is also a way I'm just giving explanation here. It's easy to understand. What you need to do here, if they ask you to calculate loss of cash thingy, you have to prepare a small bank account. Cash or bank, normally it's bank account will be better. And you record all the items in both sides, and you should be able to see what is the missing figure. Because now in this sum, it's clear, you will understand. And here, this investigating missing inventory, that when the club discovered that some cash was missing from the cash register. The following information is available. So opening cash balance was 550. So this is your cash account or bank account. Opening balance 550 you record. And the cash receipts and payments are given here. Receipts from booking, it will be 300. So you get debit here. And heat and cash and cafe and cash sales. So we get money, so it's 500 here. And heat purchase of all these things are expenses, 75, 50, and 275. And then what you need to do is here, whether they have given a closing balance, they have given. This is a closing balance. So opening balance here, closing balance 300. So debit balance. So then when you are balancing off, you know the higher side will be the debit side. And same thing you record here. And you deduct 300, 275, 50, and 75 from this, then you get a balance. That is the missing figure. So this is really easy for you to do. An important thing we have to record this is this 650 figure. You should record in the income expenditure account under expenditure cash stolen. You record it as a cash stolen 650. Okay, with that understanding, we are moving to the next slide. Okay, we have come to the very important thing, income and expenditure account. So here, remember, if incomes are more than expenditure is known as surplus, and if the incomes are lesser than the expenditure is called deficit. Some important thing to remember when you prepare income and expenditure account: adjustment should be made for accruals and prepayments. Depreciation should be included, and revenue receipts and revenue expenditure should be included. Capital receipts and capital expenditure are not included. So what we do is revenue receipts and revenue expenditure only will be included in the income and expenditure account, but capital receipts and capital expenditure are not included. Assets and liabilities at beginning of the year and end of the year financial are not included. With that idea, we are moving to a small question. So if you look at this question, the trainer club prepares its accounts at 31st December each year. At 31st December 2018, the following was in statement of financial position. Gym equipment 8,900, cafe inventory 1,200, cash at bank 700, and accumulate fund 10,800. Remember, the accumulate fund, the term is really important because instead of capital, we use the term accumulate fund. Okay. The receipts for the year to 31st December 2019 were subscription for the year, subscription advance, that's okay, cafe sales, price door ticket sales, competition fee, and subscription areas. Payment for the year were rent, cafe purchase, wages for staff, repairs to equipment, and postage and telephone. And some adjustments are given. Cafe inventory at 31st December 2019 were 1,040, and gym equipment was to be depreciated 10% per annum. In total, 120 of subscription areas later 2016, and it's the club's policy to consider subscription over 1 year later as irrecoverable. They're asking you to prepare cafe trading account, income expenditure account, and statement of financial position. So complete area is covered with this by doing this question. So if you are preparing trading account, starting with your revenue. So you can find your revenue in cafe sales 3,980. So it's here. Then you see opening inventory, you can find here, cafe inventory, opening inventory, and the closing inventory is 1,040. So both can be found. And the purchase figure must be here, 1,250. So you have recorded opening inventory, purchase, and closing inventory. And then you deduct from 3,980 this cost of sale figure, that is you get 2,570. So it is known as profit from cafe or cafe profits. So we transfer this to income and expenditure account on income side. Remember that. Okay, the next step is to prepare the income and expenditure account. So when you are going to prepare your income and expenditure account, the subscription account is they haven't prepared and they haven't asked you to prepare. But it's really important to prepare a subscription account because uh, they haven't prepared the subscription amount account here. So I'll prepare a subscription account here. Better have a I'll include a new slide since I have to prepare a subscription account. Yeah, unfortunately, I am unable to write here. Okay. I have to check the thingy. Okay, we can. Okay, but it's okay. What we can do is in the subscription account. Here, subscription in areas. You can see at the beginning of the year, it's not given. But at the end of the year, subscription in areas is given too for the year. So you can record that subscription for the year. Subscription for the year is given. So okay, and then subscription in advance is given. So what you need to do is you used to record that thingy, and they have given 120 of subscription areas. Rate 2016 is there. So with that, you need to prepare your subscription account. So with that information I have given you, you can prepare that thing, and then you get subscription figure as 4,830. And the profit from cafe you get from what we prepared from here, 2,570. And then sale of ticket, uh, all expense income should be recorded. Sale of ticket must be here. The amount is 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200. 1,200 Here, this one, 1,200. So when you sell, you get income, money. Same way, competition fee. Remember, competition fee mean the competitors, they participate, they pay fee. So that comes as, we get it. So competition fee is an income. So then get the total here. And when you look at the expenditure, you get rent, 2,000. So then you get wages to staff, 800. Then you get repairs and postage and telephone. Okay. And everything's there. But important thing, there's a depreciation. So it says cafe inventory 2019, and the gym equipment was to be depreciated 10%. So gym equipment figure is given here 8,900. So 8,900 into 10% is 890. So now we have recorded all the expenditure. Remember here, when you are preparing subscription account, is 120 is a no, not 120. Any recoverable debt is not here. Okay. Okay, it's mentioned in total 120 of subscription arrears late. It is club's policy to consider subscription over 1 year late as irrecoverable. So it's irrecoverable. So remember, this is an irrecoverable thingy. So with that, we will be able to consider this depreciation and then take the total and deduct it. You get an answer. Surplus figure as 5,475. So this is the complete lesson. So need to discuss past papers. So hope you get an idea about this lesson, and uh, I'll be winding up the session with this question, and we'll meet again with a new lesson. Have a nice day.